Finally, some good news for mortgage holders emerged last week when the ECB announced a cut of 1/4 percentage point in interest rates.
But will lenders pass this saving on to all variable mortgage holders, not just those on tracker mortgages? Personal finance expert Carl Dieter joins us now to tell us more. Good morning to you, Carl.
Good morning.
This was unexpected, this interest rate cut, wasn't it, last week?
It certainly was. The previous European Central Bank President, Jean-Claude Trichet, was retiring. A new guy comes in. Normally you expect him to kind of continue on with the old policy. What does he do? Throws it all up in the air. 3 days on the job, rate cut, totally out of the blue.
We like him then.
Well, so far, yeah, I think he's going to be popular.
What's his name, Mario?
Mario Draghi.
Okay.
And what this means is that for more than half of the people out there with mortgages, you're going to now be paying less after next month. There's 400,000 trackers, and overall there's about 780,000 mortgages.
So for somebody with an average mortgage, what are you looking at? What kind of a reduction?
The easiest way to think about it is that every 1/4% of a rate cut works out at almost €15 per 100,000 borrowed. So if you borrowed 200,000 over 25 years, you're going to get a discount or a reduced price, I should say, of about €30 per month. If it was 300,000, it'll be 45. So you can work it out that way as a rule of thumb.
Decent enough.
Yeah, and it's not going to be the first. Apparently, there should be more. We're being told overall it's expected that we might see another 2 rate cuts within about the next 6 to 7 months. So it could mean that the price of borrowing comes down, and that will be good news for people who are finding it hard to pay bills. And it will also actually make facing up to December's budget a little bit easier as well, which I think is the next big thing that people are concerned about.
Yeah, but Carl, not everybody's going to benefit from the... OK, those on trackers will benefit straight away. Those on variable mortgages, not all of them are going to see these gains.
Unfortunately, no. Obviously, every silver lining has a dark cloud somewhere in the background, and on this one, it's the people with standard variable rates. Let's not forget that over the last 2 years, a lot of banks, while the ECB didn't do anything, were pushing up these rates. Okay, so you had the likes of permanent TSB go from around 3% up to 5.5%. Now, they are going to pass on the rate cut, but let's look at the situation after that rate cut, because AIB have said that they may not, and we'll compare the two. You're with permanent TSB, you borrow €100,000. It's going to cost you $589 per month after they pass on the rate cut. If AIB did the same loan on their variable rate, it'll cost you about $490. So you're looking at about a €90 to €100 difference between the people who don't pass on the rate cut and they're being portrayed as bad guys versus the people who do, when really you're not comparing like with like, because the ones who've passed it on are already far more expensive.
They'd already hiked it up so many times. Yeah,
exactly.
Okay.
We actually have very good rates in this country still. In particular on variable rates with what we call our pillar banks, their prices are incredibly low, especially while all of their competitors have high prices. So when they say they're not going to pass on the rate cut, okay, there's a moral outrage there, but if you look at the actual costs, the people with those lenders are getting a very good deal.
Well, a couple of banks have said that they will pass it on. There's one saying, well, actually, we're outside the Eurozone, so we don't necessarily have to do that.
Yeah, well, they come up with different reasons for saying no. You can put whatever marketing spin on it that you want. I think that there is a strong argument there that having supported our banks, we should see them offer value and solutions for people who have borrowed. At the same time, though, half the people in this country have no mortgage. There's people out there renting, and there's people out there who have trackers, and their taxes are all going towards supporting these banks as well. So if banks don't make money on their loans, it means that we've thrown that cash away. If we actually do want to have some hope of recouping any of the investment that we made, we unfortunately do have to accept that banks will need to charge commercial rates that see them return to profitability. So in that respect, I think that from a banking perspective, as opposed to a moral perspective, that not passing on the rate cut would actually be the correct thing to do.
Okay, you wanted to speak about flood insurance as well today.
Yeah, we've had a lot of crazy weather. We saw just in recent weeks flooding, and in 2009, for instance, in Cork, there was €120 million damage done. And I just think it's important that people take a bit of a view on their flood insurance. For a start, make sure that you have it, because if you've had a flood claim in the past, you might not be covered the next year when you renew. What they've done typically is they'll raise the excess, or what we call the deductible. In other words, say if your house gets flooded, it might be that the first €1,000 has to be covered by you, and then the insurance kicks in. But there is actually a service out there that I think is worth mentioning, and it's called a public loss assessor. Okay. There's companies out there that will come and represent you in an insurance claim. One that I've dealt with myself, and that's how I found out about this, was Owens McCarthy down in Kerry. And effectively what happens is when the damage is done, They go out and they speak to the insurance company. Now, the beauty of that is you're not spending your time doing it. They actually know the business because they're almost like the insurance company for assessing the loss, and they make sure that you get the best return from your insurance policy. And so that's something for people, if they have had flood damage, to be aware of, that there are people out there who are professionals. They work normally on a percentage, but you can negotiate with them, and they'll actually make sure that you get the best return from your insurance. And in my experience, versus what I thought was going to happen, they actually did a far better job than I would have. And I work in the insurance industry.
Of course
I
you
would
do.
have thought assessors come out to your house from the insurance company anyway.
Well, that's true.
Are these separate to them?
Well, they're kind of, like, if you imagine that they're the devil, this is the angel, or whatever way you want to view it, they're the opposite to them. So they're actually qualified at the same thing, but they don't work for the insurance company, they work for you. The insurance company sends out a person called a loss adjuster, and their idea is to pay out as little as possible.
The flood's not that bad. You could still sleep in that bed, even though the sheets are soaking wet.
Sure. You have an indoor pond now. It's raised your property value, whatever they want to tell you. So, but the public loss assessor, on the other hand, goes to bat for you. And when they speak to the loss adjuster, they say, no, what you're saying isn't true. It actually will cost X amount to fix this. We do need to have, industrial dehumidifiers. We do need to have the place replastered, roofs repaired, whatever you want. So it's just an interesting service that I think people could benefit by knowing about.
Well, the interesting words there are adjusters and assessors.
Yeah, it's...
Finally, Carl, just I met a lady there during the floods a couple of weeks ago in Dublin. She's been flooded 3 times. Can she get flood insurance again? I mean, is there a point where the insurance company just goes, no, sorry, that's your bad luck?
Yeah, there absolutely is. It happens quite regularly. And what they will tend to do is that the first approach of an insurance company will be to increase your deductible or your excess. So, for instance, anyone who's renewing their insurance now, I bet that if you look at broken pipes, you'll suddenly see that your excess last year might have been €250. Now it's €1,000. Why is that? Because we had all that freak weather last winter, and there was huge claims, so they pushed that up. On a residential property, typically the highest excess on flooding damage that you'll get will be about €5,000. After that, though, they might just say, we're not offering it. Or you might have to go out and look in the market for a different person to cover you. But they all know where the flood damage occurred from their own claims. So it could be that you have to face into a life without flood insurance. And if that happens, you better keep a rainy day fund around, because it means that if we get more freak weather, which seems to be more and more recurrent nowadays, that you actually won't be covered. So it's something that you've got to watch out for.
That was a very bad pun, rainy day.
I didn't even realise it. I'm so sorry.
Carl, seriously.
Okay.
I'm going to work on my jokes for next time.
Oh, cheers, Carl. Well, after weeks of hard slog, have all my gym workouts helped me drop a suit size for the big day? All will be revealed in a few minutes.